This this webinar is going to be recorded, as was our last webinar, which went over Friday morning reports. For this particular one, I did record the budget variance report webinar from back in July, but for some unusual reason, I'm unable to utilize that particular webinar and upload it to YouTube. I'm not exactly certain the reason for that, but we're going to go ahead and hope that I'm able to upload this particular one. Just as a couple of housekeeping items that we typically discuss towards the beginning of every webinar, you will see a little green microphone that is highlighted on your GoToMeeting control panel. You're welcome to go ahead and click that, which will mute you and unmute you. I'm going to go ahead and keep you guys all unmuted for the time being, but you're welcome to go ahead and do so just to cut back on that background noise if there is any. But please, as we're going through this training, I encourage all of you guys to go ahead and ask any questions that you may have. You're welcome to go ahead and ask them over the phone or microphone or in the chat box as well. On your control panel, you'll see a little icon down at the bottom that will allow you to go ahead and enter the chat. With that being said, I did want to go ahead and share a little bit of information with you guys here this morning. Who's joining us here? Could this
Rachel.
be? Hello, Rachel. Good morning.
Good morning. I'm so sorry.
It's okay. No worries whatsoever. I'm glad you made it. We were just getting started, so you're good.
Oh, cool. All right, I'm going to mute my line just so there's no background noise. So I just want to make sure I'm here.
Absolutely. You're welcome. Thank you.
Okay.
So,
Thanks.
what we're going to be doing, or I'm working on at this present moment in time, as I'm actually working on a couple of training modules, guys, for Yardi Voyager, especially for some of our newer managers that just recently joined us. I wanted to be able to provide you guys a one-stop shop or a quick YouTube video training session for multiple things from entering a work order to looking up a resident to pulling or generating specific reports, things like that. So I'm going to be starting to work on that here during the month of October, and I'll be uploading videos in the meantime. What I would love and what would be super helpful to me, since you guys are the individuals that know your properties the best and who interface with specific trials and tribulations on a daily basis, is to let me know what would be advantageous for you to know. Is there a particular portion of Yardi that you're still struggling with? Is there a report that you think we should start using or maybe don't have a whole lot of experience with? Things like that. So you're welcome to go ahead and email those to me or text them on over. This is going to be mainly broad and pretty introductory to begin with, and then as time goes along, we will be getting a little bit more in depth with how we utilize Yardi. Okay, so with that being said, welcome to our second budget variance report training. The first one took place in July, and it really allowed all of us the opportunity to discuss the budget variance report in detail. This training is going to be very similar to the initial one with a couple of variations here and there. For those that have attended the prior BVR, I understand that you may think this could be not necessarily a waste of time, and I'm hoping that you're not going to interpret it as that. What I really want to do is I want to continue to discuss what we reviewed in July and really apply a little bit more finesse to what you're doing. I've received some fantastic feedback from the executive officers as well as your regional managers as to how you've been doing since July. And there's some things we're going to go ahead and touch on and maybe go into a little bit more detail about, while there are other things everybody's doing remarkably well and rather fantastically. For others, especially some of our newer managers who just recently joined us, this is going to be a great opportunity to learn about the budget variance report, why we pull it, what purposes it serves within Hudson Grove Property Management, and how it affects your day-to-day operations, not just because you pull this on, hopefully you're pulling it more than on a monthly basis, you're pulling it frequently. When I worked on site, I used to pull the budget variance report on a weekly basis, sometimes more, just to see how we were doing with our cash flow, how we were doing with our expenses. It's a really great gauge in regards to managing the finances for your properties. So I have a little presentation here, and then we're going to jump into a live action demo of the actual budget variance report. with that being said, I hope you guys are going to take some really good notes. I think we're doing this at the perfect time of month. I believe you all should be at month end, if I'm not mistaken. So with that being said, let's go ahead and share my screen. Give me just a second here. Okay. Looks like my screen should be going live here, which means you all should be able to see what I'm looking at. And let's get right into the presentation. So the BVR is the Budget Variance Report. And this is a report that you, as property managers, are pulling at minimum on a monthly basis. Well, what is the variance report in a sense? Well, in the greater scheme of things, it's a report that highlights the finances or the specifics expenditures of your property. What have we budgeted for your specific property, and what have you used within that time period? It allows you to recognize your spending habits to see where your money is being allocated. It also allows you to recognize areas that may benefit from some improvement in spending habits. So it really gives you a finite idea of what your financials are doing at any given point in time. Am I over budget or am I under budget? Do I have any money at all to spend on this particular purchase? Uh, it allows your executive officers to understand how you're managing the finances of that property. And during this time of year, as you all have experienced firsthand during budget season, to understand what general ledger accounts may benefit from additional expenditures in the future, and those that you may not need that $200 budget any longer. You could be allocated to other areas. I think the most important thing, and something that we really stress here, is that nobody knows your property better than you. I can sit back and say, I have 9 years of on-site experience. I'm familiar with the on-site management aspect, but I don't know Village by the Park like Rachel will know Village by the Park, and I don't know, how Miners Mesa operates within the golden market. You guys do. You know it better than anybody else. And this report really highlights your management capabilities. It's sort of a direct reflection of how you manage the finances and logistics uh, of your property. And fundamentally, at the end of the day, we want to make sure that your property is profit producing. That's why we have them. Uh, is that always going to be the case? Stratford Plaza is going through a full renovation and remodel. We understand that its expenditures are going to be much higher than perhaps a stabilized property portfolio like Golden Arms and Miners Mesa. So it's not that we're blind to or ignorant of that fact. But at the end of the day, these properties should be profit producing. That's why our investors are investing in them. I think that's the best way to say it. So it's really important that you treat your finances of the property like you do of your households. You want to be very cautious. You want to be very in tune with those purchases, and what we're doing with that money. Every purchase, really needs to be validated to a certain extent. We don't want to be buying anything frivolously. At the end of the day, we want to make sure that our properties are showcasing a surplus of profit, so that we genuinely know that investment was sound. Uh, be careful, be thoughtful, and use your consideration, yeah, when you're making purchases. So the BVR in of itself explains what aspects of the property operations are thriving and those that are in need of improvement. It really does equip you to take action to ensure your property, operates efficiently in such a competitive market. Denver, the Metro Denver area, I believe, was rated number 3 or number 4 nationwide with its growth most recently. I think we were just behind, and somebody can correct me if I'm wrong, but I think we were just behind Silicon Valley and the Dallas-Fort Worth area. Our growth has been tremendous. It really has. Denver's overall vacancy has decreased tremendously within the last a couple of years, which has really pushed for new construction. And we really want to stay as competitive as possible within this market. The easiest way to do that is to be investing in your properties, and the easiest way to invest in your properties is to make sure that we have money to do so. I think we all can appreciate that money solves multiple problems at all levels. We want to make sure that we're creating value for our residents. We're producing profit for our residents or our investors, and we're exceeding our owners' expectations. We have an owner visit this week, so I genuinely appreciate you guys taking the time to go ahead and chit chat with me here this morning about the BVR. For after this concludes, you're going to hit the ground running. We have Ben and his father who will be visiting several different properties this week, and I know you guys have been working tirelessly to make sure that your properties are showcasing or showing well. And you've been working hard on your curb appeal. You've been working hard on making sure that your delinquencies are low and things like that. So keep doing what you're doing. I want you to know how much we genuinely appreciate that hard work. It's not easy, especially when you're trying to transition a property. So just know that we certainly do recognize what you guys are accomplishing on site. It's a slow but steady movement in the positive direction. Okay, so what is a variance? Well, in the most simplistic of terms, you have two different types of variances. You have a positive variance, which is typically under budget, and then you have a negative variance, which is typically over budget. And that's exactly how they're reflected on your BVR. You'll notice that positive variances will display as a positive number, and negative variances will typically have a negative number or are in parentheses. And when I generate the BVR, you guys will be able to see that firsthand. The variance in of itself tells us where you're over and under spending and allows us to evaluate those financial needs based off of the demands of the property. Okay, so when preparing your BVR or when you're reviewing your BVR, we want you to use this tip jar. We want you to put on your thinking cap, and we want you to think ahead and prepare. Like I said earlier, with the BVR, this is a report that although you work with it or you genuinely pull it on a monthly basis, I'm hoping that you're pulling it more frequently. It really is a sound report to be using to validate your financial purchases. Is it feasible to be pulling it for every purchase? Absolutely not. But once a week really does allow you to understand the dynamics of what's happening with the financial component of your portfolio. So try to review it frequently. One of the things we never want to do is we never want to assume. Okay, never assume that a specific positive or negative variance is based off of a specific purchase. Really be smart about investigating your positive and negative variances. Be certain that you're drilling down to the very fundamental of that purchase. Always research before you put it on your variance report. It's going to save you a tremendous amount of time, as well as your regional managers and executive officers in investigating what that is. Some purchases are pretty standard. If you just did a full resurfacing on your pool in your over budget in the capital expense for your pool, that's understandable. Let's confirm that, okay? So always drill down to investigate, always research. I think this next line item is where a lot of individuals are having some troubles, maybe struggling with this. So I really want to make sure that we understand and are on the same page when we use brief yet concise explanations. I have a couple of examples that were provided to me. I'm not going to necessarily say them here over the training, but just looking at the examples, this seems to be something that we're having a little bit of issue with. And so we just want to make sure that you understand, the executive officers and the owners and investors, they don't need every intimate detail of your purchase. What they're looking for are those large expenditures, those items that are just pushing you so far over budget. And we know that if they're appearing on your BVR, that they're a valid purchase. We just need a very brief yet concise explanation, right? So let's take that pool example from earlier. If you had the pool resurfaced what the owners and investors don't need to know is that the pool was resurfaced because of 5 years of prior neglect by the previous property management entity who never opened the pool properly, who never utilized a a company such as Performance Distributors or Performance Pools to manage their pool. What we definitely want to indicate in there is very briefly why we had to resurface that pool, and it could be just as simple as a 3, 4, 5 word explanation. Some things are going to require a little bit more detail, but what I've learned, and hopefully what you've learned, through filing these BVRs, is that simplicity is key. And it's much easier for your regional manager to come back and say, you know what, let's get a little bit more detail here than having them go through and edit every single line item. I'd rather the regional manager reach out to you to say, can you give me a little bit more detail than having to go through each line item and correcting that. And then finally, and another item that we're kind of seeing isn't necessarily sticking to the BVR is those unit numbers. Or are those unit numbers? And the last BVR training, I know I really hammered this home. So I really want to make sure that we all understand that unit numbers are absolutely pivotal. The only exception really to this rule, and I use exception very loosely, concerns renovations and remodels. And the reason for that is because you're purchasing items typically in bulk. So for apartment complexes like Stratford Plaza or Kendall Street apartments, you may purchase, 10 refrigerators at once, or, 10 cabinet or bathroom vanities at once. And that's understandable that you're not always going to know what the unit numbers are applicable to those, especially since the entire purpose of a renovation and remodel is to transition every unit, right? But for those stabilized properties, for those properties that are going through maybe a gradual renovation where you're not purchasing these items in bulk at any point in time, you definitely want to be able to attach that unit number. I will tell you, it saves your regional managers, the executive officers, our operations support specialists and our business support specialists a tremendous amount of time. It just saves them that time from having to go do the extra bit of research and then actually disrupt and disturb your day to obtain that information. Working firsthand with a couple of property managers in the past, I can understand that sometimes it just, at the end of a month, for we're at the end of September, you're not going to necessarily remember the units that you purchased these items for at the beginning of the month. It's not going to stick, and we get that. So that's why it's really important to be applying those unit numbers to your accounts payable entries in the brief Twitter description. That's the 140 character description down at the very bottom while you're entering your GL account numbers, okay? So please remember to utilize or insert your unit numbers there. We'll discuss this a little bit more in depth as we go along. Okay, so how about we get started? So before even generating the report, there's a couple of little pieces of information that you're going to want to go ahead and pull. The first is how many leases expired within the month that you're filing this report for. Okay, so you can, hopefully you have been keeping an active record of those lease renewals. And for some communities, your properties currently have leases that expire at the very end of the month that don't go into effect until the first of the following. And then for others, you have some that are expiring mid-month. So be cautious about how you're keeping track of those totals, okay? How many of those residents from the leases that expired renewed? And then how many move-ins were there? Hopefully you're keeping a running total of this list, and you're keeping track of this information. My recommendation is to be keeping a live tally, so to speak, and you can do that on a note, a digital note, a post-it note on your computer, or you can do it longhand. Obviously, for those leases that expired, there's an active report within Yardi. Rachel might know this because I know Rachel's very familiar with Yardi, and maybe you guys have discovered this report as well. But I have yet to find a report that tracks how many move-ins were in a specific month. Rachel or anybody else, do you guys know if such a report exists? Okay. Well, if such a report exists and we're able to find it, I know that that would be really helpful to a lot of you. So, um, I would be happy to go ahead and if we find that report, share that with you. Okay. Another item that you want to remember is how to calculate your closing ratio. It's incredibly easy, and it requires a very simple formula. What you do is you take how many leases renewed in that month that you're reporting on and how many leases expired within that same month. Multiply that by 100, and that provides to you the closing ratios. So for example, if you had 7 leases that expired in that month and 5 of those 7 renewed, you take 5 and divide that into 7 and then multiply that by 100, and it provides to you a 71% closing ratio. And that's amazing. I mean, that is awesome. So again, you take the number of leases that renewed and divide that into the number of leases that expired. Multiply that by 100 because you're going to get a decimal, and that's why we multiply by 100. It moves that decimal point over, and that provides you with the percentage of whatever it may be. Okay, so if you had 10 leases that expired, 5 of them renewed, that'll get us 0.50. If we multiply that by 100, it gives us 50%. Okay, and this is a component that is required on the BVR in of itself. Okay, this is your box score summary. This is another piece of information that's going to be required. Both your occupancy percentages and your closing ratios are required on the BVR. This particular occupancy percentage is actually required for your first section within the BVR, the 5,000 to 5,250 GL account section, which I'll show you guys here in just a minute. But you pulled this particular report, the box score summary, from, in fact, let me go ahead and I'll show you. You're going to pull this directly from Yardi, and this is in the report section, the analytics section of your reports area. So let me just switch. I'm going to switch into conventional management, actually. Okay, so if you go into analytics and you go into residential analytics here, you'll actually find under report type the box score summary. And as you can see, it's right here. So with any of our residential reports, again, my first recommendation is to make sure that you generate, your property code, okay? And then go select the report type that you're looking to pull. Box score summary, and then what you're going to notice is that your overall screen and the requirements of that changes, okay? And that's how you pull your box score summary. Just make sure that you're pulling for the active month that you are, or the month that you're researching for your BVR, okay, or generating. So in this particular instance, let's just pretend we're at the end of September. If it's blacked out, you're welcome to go ahead and change those figures. If the boxes are gray, there's nothing you can do there. Yardi is going to auto-generate that information for you. And you can do either by unit type or property. Let's go ahead and do by property. We want to make sure that show graphs and show grids, both of those are unchecked. And then we'll go ahead and hit display. And with any small amount of luck, I went ahead and pulled that correctly. And it looks like for Sheridan, the box score summary over here, we have the percent occupied at 91.66. Okay, so that's how you pull the box score summary, and that is going to provide us with the most accurate occupancy percentage. With that being said, we all understand and appreciate that Hudson Grove is occupancy driven. There's no way around it. Our goal is 100% at any given point in time. We understand that is a lofty goal. We get it. We're not adverse to understanding the challenges associated with that. 98, 99% awesome occupancy percentages. For many of you, you're still going through that stabilization process. And the type of clientele that we attract to our communities typically stay over, the longer term. Especially as we're starting to transition these communities, we're sort of going to have a really fun eclectic niche within the Metro Denver marketplace. Transitioning some communities from Class D or Class C up to, Class B plus, some of them even going to Class A. So, kind of keep in mind that residents stay at communities where they feel appreciated, where they feel valued, where the price works for their budget, and in any number of other variables. It's really, really important that our managers and every on-site team member, from our groundskeepers to our maintenance supervisors to our leasing agents, work diligently to be capturing that resident retention, and making sure that we're keeping our occupancy as high as possible. That's why we have that 60-day notice to vacate. It gives you guys plenty of time to be filling that apartment or securing the next new resident for the community. Okay, this was another topic of discussion that I wanted to go ahead and kind of drive home with you. So this is your quick guide, which are the basics. This goes over the specific GL account numbers or account codes that our executive officers and regional managers are looking at specifically. Is that to say that it's all of them? No, this is not all of them. Okay, but this is certainly the quick guide, and the continuation of it in a couple of slides are going to tell you specifically what we're looking for. And as you guys are working with this report more and more, you're going to understand that specific GL accounts require explanations when you've hit a specific threshold. So for example, if you go to the fourth one down, 6395-999, your total administrative expenses, you have to explain any budget overage it or any variance over budget by $200 or more. If it's $199, you don't have to explain it. If it's $170, don't even worry about it. $250, you gotta tell us what that expense was. Okay. Some of them use a specific flat rate, like $200. Others, like $59.95-999, our total other income right here. When it's less than 50% of budgeted expectations, you have to explain that. Okay. Now, from what I understand, we have some GL accounts that are being explained that it's absolutely not even necessary. We don't even hit a specific threshold. It's, not only is it not necessary to learn more about that variance, positive or negative, they don't even hit the threshold. And then we have others that do hit or surpass that threshold that there's no explanation about whatsoever. My biggest piece of advice is, if you're uncertain, it takes about 5 seconds to send out a quick email to your regional manager for them to clarify. As a former regional manager, I know I worked very closely with a lot of my on-site managers on their BVR, and I can't even tell you how many times they would reach out and they would say, "Hey Vince, I'm seeing this. Should I or should I not?" And it was a really quick response back. Absolutely no need, or yeah, sure. I would recommend we go ahead and do that. I think it's really important that you guys print out the Budget Variance Report training guide. And I'm going to send this training guide to you guys. I'm also going to make it available through YouTube. I'm pretty certain I can attach links to YouTube that you guys can actually click and just pull that information from. It's really important that you guys print out that training guide, have it handy. As a regional manager, when I was reviewing your BVRs, I always had my training guide right there with me. Why? Well, because it's a report you guys are formatting once a month. Let's be frank here. What you do on the first of the month, you're not going to necessarily remember by the end of next month. This report sticks with you the more frequently you do it. And because it's only one report, or it's a report you pull once a month, you're only dealing with it 12 times a year. It's not like the Friday morning report where you're pulling once a week. you become more intimately familiar with that report because you're interacting with it more frequently than the BVR. So, my recommendation is print out that training guide, print out the example BVR. That's actually what I used. But the training guide isn't extraordinarily long. It goes over each section and the requirements of each section, and it tells you specifically verbatim what our regional managers and what our executive officers are looking for. So it is such a fantastic resource that I would so encourage you guys to use it. Print it out, put it right in a file, or put it on your desktop if you're trying to go green, which we are. I think we're trying to go paperless here. So just try to do that. Okay, dead horse with that one. So 5250-050, your residential delinquency. You want to be if you're trending above budgeted expectations, why? What did you do that allowed you to really close or lower that residential delinquency? Uh, if you're trending below budgeted expectations, we also want to know why as well. Are you waiting on housing vouchers or utility reimbursements? Maybe the resident is being evicted and the balance carried over into the next month. What's going on with that residential delinquency? Your total other income, you need to explain any missing income that's less than 50% of the budgeted expectations. So laundry income is a perfect example. Maybe during the month of September, you pulled laundry income once. You emptied those machines once instead of twice a month, and you did one deposit instead of twice. We want to know that, okay? It's no harm, no foul to a certain degree. When I say that is we understand that life catches up with you. We understand you guys are very busy and very engaged with your properties. So it's nothing that we don't understand. But with that being said, we also want to make sure that you're hitting the benchmarks of your property and you're meeting expectations. Keep in mind that your total other income and total rental income all go into consideration when we are calculating your monthly bonuses. So keep that in the back of your mind as well, okay? Total rental income, are we trending above or below budgeted expectations, and why? If we're above, what did we do to collect that extra set of bit of income? If we're below, why aren't we hitting that expectation? This could be as simple as having an unexpected market rate increase that really helped you to collect that income, or it could be a case of having a pretty awful residential delinquency because the holidays or some sort of extenuating circumstances. Tell us why, but be brief yet concise in your explanations. Total administrative expenses and total supplies, pretty straightforward here. If you're over budget by $200, let us know. If you're under budget by $200, don't even waste your time. Save yourself that explanation. Move right on along to the next section of your report. Okay, total payroll expenses. Total payroll expenses, you're going to find that in your 6,000 to 6199-999 GL accounts. We want to know why we have overtime at a specific property. If you're salaried, you don't have to explain your overtime. We get that sometimes you're not going to work that 8-hour shift. You're going to work a 9-hour day, but it's going to work itself out hopefully later on down the road. Maybe if you worked a 9-hour day on Monday, you're able to leave a little bit early on that Friday. But for your hourly employees, especially for your maintenance supervisors and support techs, we definitely want to understand where that overtime is being generated from. Keep your explanations, again, brief yet concise. We don't need to know where that or who that overtime is attached to. So if Bill and Jeb both worked overtime, throughout the week, we don't need to know the specific hours applicable to Bill, and we don't need to know this, or Bob, and we don't need to know the specific for Jeb. What we do want to know is the total accumulated hours of overtime. Oops. So in this example, we have 12 hours of total overtime was paid out. 8 hours were due to snow removal. 4 were due to after hours leak in apartment 101. That's a great explanation. It could even be simplified further, okay? So we don't need to necessarily know who those overtime hours are applicable to. You do. you need to understand if you have one particular team member who is just kind of milking that clock or tends to get the most overtime hours. We want to know, you want to know why, what's happening, what's going on with that. I used to have I was actually just talking about this not too long ago. I used to have a maintenance support technician who, whenever he was on call, he always had overtime, and my other two never had overtime. And it was one of those situations where I had to sit down with the individual and see, figure out what was going on here. Were these valid calls, or was there something else going on here? So that's something, as an on-site manager, you want to be taking into consideration. But overall, we want to know the total number of OT hours, and then of those total numbers, what were they spent doing? Okay, be brief yet concise. Okay, here we are. I told you guys I would be getting to this. It's the unit numbers. Here we are. Okay, take a little sip here. It seems like such a very simple thing, and in retrospect, it probably is a very simple thing, but it's habitual. So I want you guys to start developing these habits with your OT, with your unit numbers, with some other topics that we've discussed so far. I'm hoping that you guys are keeping a running list of these things, and or entering really good notes into Yardi. Remember, when you're drilling down into Yardi, when investigating a specific variance, based off of your notes, will determine where that expenditure was applied to. So a basic rule of thumb is to apply a unit number to any new appliance purchase. Any unit where carpet and vinyl was replaced and or installed. Countertops and cabinetries or tubs that have been resurfaced, let's go ahead and apply a unit number to that as well. And or where we had a high dollar maintenance repair for a specific unit, right? So if we called out Avalanche Mechanical to look at an AC unit in a specific unit, and it cost us $500 to $600 for that site visit, we definitely want to explain that in our notes, right? We went to apartment 108 to go ahead and implement these repairs. It cost $500, right? So use those unit numbers. Where are unit numbers not applicable? Well, if you purchased 5 filters for preventative maintenance, we don't need to know the 5 apartments that those filters went into, right? It seems kind of superfluous. So just those high dollar purchases, when Jackie and Marilyn are reviewing financials and explaining and putting these into their financial reports, they need those unit numbers. They need to be able to explain those. Now, there was some discussion in regards to blinds, your horizontal window blinds, those gorgeous white vinyl ones. There was some discussion in regards to using those. And I think that the easiest way is, if you're replacing those during the make ready, it's not really necessary. But if it's a replacement outside of normal wear and tear, like it's an occupied unit where you're replacing those vinyl blinds, and it caused you to go over budget, I think that that's perfectly reasonable to explain. Okay, continuing with our quick guide. 6520-999, your total outside vendor. Your total turnover expenses, your total extraordinary expenses, your total extraordinary outside expenses. You guys are going to notice that your thresholds are all set at $200. For your extraordinary supplies, this is your capital expenses. No doubt you're going to hit over that $200 threshold, so you're going to end up explaining every line item there. But if you look here, turnover, extraordinary, and outside extraordinary supplies and extraordinary outside services, those all require unit numbers. Every single one requires a unit number. You have to apply a unit number to those if for any particular reason you went over budget. Again, the only exception to this, I feel, is if you have a renovation or remodel. And naturally, those are going to be coded to a completely different GL account anyway. So I feel like that's sort of resolving itself. Okay. This is a professional report. We seem to still be having a little bit of trouble with our formatting. So I'm really excited to do that live demonstration to review exactly, again, how we want that to be formatted. Again, print out that example BVR because it really does show you exactly how each section needs to be formatted. Please don't use highlighter or fill any cells in your reports. Leave it utilitarian. We want to make sure we're not using grids and we're not using lines. Make sure it's formatted consistently across the board. Okay. So typically what I do is when I'm generating this report, before I've even worked with it, I immediately save it, right? So you're going to generate the report in Yardi and then you're going to save it to your desktop and you're going to name it and you're going to make sure that it's saved in .xlsx format. And that's really important that you make sure that you select that specific format. That particular format, the .xlsx, make sure that it's going to be universally accepted regardless of whatever machine is being used. So whether it's an Apple machine or whether it's another Windows machine, regardless of version, maybe you're working 2016 and your regional manager is using 2014 or 2013, the XLSX format really allows it to be universally accepted. Please use that format, that file type, when you're saving this report. And it is in the drop-down menu available when you're saving it. And I'll show you that momentarily here. Set up the report so that it can be printed in landscape mode. Most professional financial reports or any accounting report is printed in landscape mode. You'll also find that it fits this report perfectly. Fundamentally, all of your cells, your columns, your rows will fit onto all of your columns will fit onto a single page. Your rows will obviously go onto other pages, but just looks much more professional. Okay, so keep that in mind. Because this BVR is a professional report and it's shared not just with your regional managers, and I think that sometimes that's lost or there's a disconnect there. Your report doesn't stop at the regional manager. It actually goes to, Terry and Tracy as our executive officers, and then even our owners and principal investors, or our principal owner and our investors. This report can be shared at all levels, and as a professional report, we really want to make sure that it's showcasing your professionalism and your talents. There's reasons why you guys are in the position you're in. You're greatly valued. You bring a tremendous skills set to the table. And we want to make sure that your reports, things that are being translated onto paper, really reflect how amazing and fantastic you guys are. So take that extra bit of time to check the spelling and grammar. Make sure that you're checking your sentence structures. Always review your report before ever sending to your regional manager. That's really important. Make sure that they can see you took those extra steps to really make that report shine, okay? Ensure that the final product is something you can be proud of. Make sure that you can explain anything on that report regardless of who's calling you. If Ben has a question about something, it's not uncommon for him to reach directly out to a regional manager or directly to a property manager. Hey, I have a question. What's going on here? With that being said, don't hesitate to ask for help. Your regional manager, Terry, Tracy, myself, other property managers, we're all here to help each other. Really, really, really don't hesitate to ask for help. The worst question anybody could have is the one that's not asked. Finally, when all is said and done, be open and receptive to constructive feedback. It takes practice and fine-tuning the specifics, and we get that it takes time. That's why we're doing this training again. We understand that it takes a little bit of finesse, okay? It can be really frustrating, and I appreciate that there's a level of frustration that comes back when your report is bounced back to you on several different occasions. And I want you guys to understand that from this point forward, that may very well be what your regional managers start doing. They may actually take that report and they say, you know what, this report isn't ready for me. I need you to review it in more detail, and please send it back to me when it is. For many of you guys, we've been working with you consistently across the board for many, many months. So you guys are at a certain level now where you feel comfortable with the report. At least I hope you do. Okay, and you're able to really understand what your respective regional manager is looking for. Now, I understand there's been quite a bit of change at the regional level, and those expectations may have changed along with your regional. However, that's why we have the training and the example BVR, so that you can see consistently across the board whether you work at Capitol Hill or you work at Wapiti Meadows or Wapiti Meadow. I apologize. The expectations are all the same and they're consistent throughout. Standardization. Don't worry, we'll be patient. We just want you to be patient as well. Okay, with that being said, let us go ahead and actually play along with the BVR. How does that sound? Before doing so, I would love to know if any of you guys have any questions so far, and if there's been anything that I haven't quite touched on.
Vince, I would ask, when you save these reports, that Excel workbook, the XLSX,
Yes.
can you show us that? Because I don't see it showing up on my computer.
Absolutely, I would love to. Okay. So to pull the variance report, the first thing that you're going to do is you're going to go to your community manager dashboard. And Irene, I hope you don't mind. I'm going to go ahead and use Sheridan South just to generate the report. So what you're going to do is you're going to go to Analytics and Financial Analytics. And it's going to open up this beautiful window here. The first thing that you're going to do is to change your property code to the property in which you're pulling for. We're going to keep cash as the book. In fact, if you click on book, I think you only have accrual or cash, and so we want to know what your cash expenditures have been. Account tree can stay blank. We do want your report type to be budget comparison, and I believe you can even select budget comparison with PTD, but let's go ahead and just keep it at budget comparison. And then you want to pull for one solid month. So if we're in October, we're going to pull for September. For November, we're going to pull for October. For in September, we're going to pull for August. Next thing that we want to do is we're going to make sure that grid stays checked, decimals stay checked, and we are going to suppress that 0. Don't worry about freeze pane, showing the property name, or graph. Well, actually, let's go ahead and show that property name. I don't actually know, we can't, so that's okay. I think the property name auto-generates based off of this field anyway. And then what we want to go ahead and do is click display just to make sure that everything generated correctly. And as you can see, this is the report in of itself. We have your PTD actual column and your PTD budget. We're going to discuss that a little bit more in depth, and the specific variance associated with it, as well as the percentage of that variance. And then we also have your year-to-date actual expenditures and what you were budgeted for year-to-date, the variance, and the percentage applicable to that, and then your annual figures. After displaying, to make sure that everything generated correctly, we're going to go ahead and click that Excel button. And for you guys on Windows machine, your download is going to appear at the very bottom, just above your start bar. For your Windows machines, it's going to generate into the download here. You have a little circle with an arrow pointing down. So let's go ahead and I'm going to open this just so I can show you how to save it. Okay, so here's the budget comparison, or the budget variance report. First thing you do when you open it up into Excel is to go to File and Save As. Now, yours is going to look a little bit different, but you should still have all of the same options. So you're going to want to go ahead and name it. And if I recall correctly, the way we named it was your property code, BVR, and then the date that you guys are or the month that this is applicable to. And I usually save to the desktop. And then down here you have file format. And as you can see, this automatically defaults to 97-2004 workbook. Well, that's not universally accepted, right? My package, I think my Microsoft Suite is 2016. So you want to be selecting Excel workbook.xlsx. And it could be down here under specialty formats, but most of the time I believe it's right up here. At least for me it is. And then you go ahead and click save. And it'll save it to your desktop. Well, let's just pretend that this is the budget, okay, that we just pulled. You saved it to your desktop, now you're working with it, okay? So this is how it's going to appear. As you can see, we don't have, and actually I'll show you. So remember earlier when we were pulling that report, we had selected show grid lines, right? These are the grid lines, they're the gray grid lines, but they don't print. What we don't want, and what is happening with some of the reports is, do you see this little black line here, just under -869? That has more to do with the general formatting, and that's in this box right here. And this is what's called border. We don't want any borders. The only borders we want are what's applicable to what's already been formatted by Yardi. Now, sometimes these borders will carry on down as you guys are inserting lines under specific GL accounts that need to be explained. What you'll want to do is you'll want to make sure that you get rid of those border lines so that it's nice and clean. Okay, so with that being said, let's go ahead and play a little bit. Let's play around a little bit with the budget comparison. What we're going to do is we're going to play around with this for probably the next 10, 15, maybe 20 minutes, and then I'm going to open it up for another Q&A. What I'm going to do is I'm going to go over the specific sections. I'm not going to go over all of the sections. That's really where you want to make sure that you're referring to your training guide as well as the example BVR. And the example BVR doesn't give an example for every explanation you need to be using. It just gives you a general overview. However, the training guide tells you exactly what GL accounts need further explanations and how to explain those, what those specific thresholds are, okay? What I'm gonna do is I'm gonna go over those sections where we've noticed a lot of our managers could benefit from some fine tuning. So again, you'll see all of the columns that I explained before. The three columns that we're gonna pay particularly close attention to are columns C, D, and E. And again, those are, column C is what you actually spent in that given month. Column D is what you originally budgeted. And column E is the variance between the two. What's the difference between the PTD actual and the PTD budget? And you're going to see these numbers reflected as either a negative or as a positive. This is a negative variance. This is a positive variance. This negative variance indicates that we were over budget, whereas this positive variance indicates we were under budget. So for apartment vacancy loss, it looks like on this particular month, March of 2016, we had more units that were sitting vacant than what we had anticipated. We only anticipated on losing $4,000, we'll say $4,500 on those units sitting vacant, where what we actually collected was over 10,000, or what we lost was 10,000. For delinquency, you'll see that we budgeted 2,000, but we were only adversely affected by 1,700, which means we were under budget of expectations. From what I understand, some individuals are switching positive and negative variance. So again, negative is you're over budget. Positive is you're under budget. So the first section that we're going to want to go ahead and play around with is your 5,000 through 5,250. This goes over rent as well as any vacancies and losses. And there are 4 line items that are absolutely emphatically required for this section. So the first thing that you're going to want to do is you're going to want to insert 6 lines. If we have 4 explanations, 4 line items, we want 6. Why? Because we want lines 18 and lines 23 to be blank. We want those to be completely blank. Whereas 19 through 22 will have the information contained within. Keeps it really clean, keeps it looking good. So the first item is to identify those line items or those GL accounts that require explanations. Without exception, in this top section, what is absolutely required is to explain apartment vacancy, and there are 3 explanations applicable to this single line item, and then residential delinquency. And what you're going to do is you're going to use a numerical indicator that will actually be carried down over here. So let's go ahead and indicate that we have 4 line items that need to be explained, or 4 explanations. And what you're going to do is you're going to ensure that you justify these lines to the left. You're going to increase the font size to 11. You're going to make sure it stays bold, and then you're going to also italicize. So one more time. You're going to justify to the left. That's this item right here, or align to the left. You're going to want to make sure that you increase the font size to 11, helps it to stand out a little bit more, and then you're going to want to italicize those explanations. Well, for apartment vacancy, we're going to go back to that information that you pulled earlier before even generating this report. We want to know how many leases expired during the month you're polling for, or the month prior, okay? And how many of those renewed? So for the month of March, we had 11 leases at the end of March, okay? Of those, 8 of those leases renewed, which equals, going back to that calculation, you take how many leases renewed and divide it into how many leases expired. This should provide you with a decimal, and then you multiply that by 100. And if math is correct, we should have a closing ratio of 73%. 73% is an amazing closing ratio. You're definitely going to get that portion of your bonus if you have that. Anything 50% or above, pretty darn tootin' amazing, okay? This is the exact verbiage that you need to be using. No variation in that. There were 11 leases that expired at the end of March, 8 of which renewed, which equals 73% closing ratio. Exactly how it appears here is how you're going to indicate it on your report. That's why I'm saying pull that example BVR. For item number 2, how many move-ins were there during the month of March? Well, there were 8 move-ins. Use that exact verbiage as well. This verbiage was approved by Tracy. If you use it, you're going to be good to go. 3, what was your occupancy percentage? Well, let's go back to that box score summary. Your occupancy percentage during the month of June is 98.3%. That's pretty darn tootin' good. That's right within that 98 to 100% threshold, right? 100% is the lofty goal. 98 to 99%, you're doing amazing. And then number 4, okay? These 3 line items, you pulled that information prior to generating the report. Number 4 requires a little bit more research. This might require you to drill down to identify why you were over or under budget. In this particular example, we were under budget for our residential delinquency. We anticipated having 2,000, we only had 17. Well, why? Well, after drilling down, it was discovered that delinquency is under budget for the month, but over budget for the year. Whoop, I can spell. Due to 3 evictions in February. Now, that's a good way of explaining that line item if you're not quite certain. The other good way of explaining that line item is to ask for help. If you're fundamentally uncertain, don't leave it blank. Don't not explain it. Reach out to your regional manager. Reach out to the controllers, Nellie or Dee Dee. A lot of the time they can look right at a line item. They have that education, that training. They can look at a ledger and immediately go, oh, this is what it is. Or they might need to do a little bit more research as well. If you're ever uncertain, don't hesitate to ask. All right, let's carry right on along. Let's move right on down. This section 5299 to, let's see here, 5995-999, this little section here, okay, this does require an explanation as well. So what we're going to do is we're going to go ahead and insert the applicable lines, and what you're going to do is you're going to look at your variances. Are we over or under budget within a specific GL account category? Well, as you can see, under laundry income, and this section right here is that 50%. If you've collected less than 50% of the total other income, you need to explain why. So let's take laundry and vending income. We originally budgeted for $11,020, but we only collected $812, which leaves us a variance of $307. Well, what's half of $1,120? Does that meet the less than 50% threshold? No, it doesn't. Right? Half of 1,120 is 560. So if we collected under 560, then you absolutely would have to explain this line item. Here, right here, we have our application fee income. We were budgeted for 180, but we actually collected $595. That gives us a positive variance, right? We made money of $415. Well, we got to explain that. So let's go ahead and put a number 1 right beside that. And that's how you do it. You continue on down the road. You just continue on down the line. And some items in here you're going to want to explain. Other items it's not necessary, right? So forfeiture of deposit, not really necessary to explain. Late fee income, you want to explain that if you meet that 50% threshold. Legal and eviction reimbursement, you'll want to go ahead and explain that if you meet the 50% threshold. Same with month-to-month fee, maybe miscellaneous tenant income. Let's not worry about your pet rent or your pet fee, not even your utility reimbursements. Utility or administration fee, yeah, you'll want to go ahead and explain that as well. We're right at the 50% there, so we don't have to really worry about an explanation. But let's come back up to application fee. Again, what you're going to do is you're going to insert your number 1, the numerical indicator applicable. You're going to align left, increase your font size to 11. I just use that little A with the up arrow to do that. It's an incremental font increase. And then go ahead and italicize, and you have an incremental font decrease as well. And again, what you're going to want to do is you're going to want to go back and you're going to want to drill down into this. So Irene, I'm going to use Sheridan South again as an example. We have your application fee, $300. You know, to go ahead and explain this information, you want to be drilling down. So let's go back. So for this particular one, our application, it looks like actually she does want us to go ahead and, we'll just go ahead and explain this one as well. We'll go ahead and explain this as well. and what you'll see is the numerical numbers I actually matched. We have 1 and 1. If both application fee and administration fee can be or are applicable to the same reason, you can sometimes use the same numerical indicators, right? So if application fee and administration fee were both affected by the same thing, you can link those two up essentially and explain in one line item. Well, application and admin fee collected are over budget due to a higher vacancy than anticipated. We know this because if we're collecting more applications and we collected more non-refundable administration fees, they're associated with vacant units. Is the only reason why we would be collecting them. If we don't have anything to lease, we wouldn't really be collecting. Payroll expenses, right over here. This does not require numerical indicators with the exception of one single line item. The only line item that requires a numerical indicator and explanation is if you were using temp services at your property and you were over budget. Now, almost all of you guys should be over budget when you utilize contract or temp services. Nobody's budgeted for contract or temp services. Even if we know we're going to need to bring them in ahead of time, it's just one of those expenses that you just can't budget. We don't know what the long-term or short-term repercussions are going to be by utilizing those services. So if you are over budget in contract temp services, you are going to want to utilize a line item for that, okay? And how about we just pretend that we are over budget? Well, then we have two different line items that we need to be explaining. So what I'm going to do is I'm going to insert enough rows to make sure I have a blank row above and a blank row below. The first line item doesn't require a numerical indicator. What you're going to do is you're going to explain your overtime. Again, in this particular instance, we had 12 hours of overtime. Let's go ahead and justify or align to the left. Increase font size to 11 and italicize. We had 12 hours of total overtime paid out, 8 of which were due to snow removal, and 4 of which were due to a water leak in apartment 101. Brief yet concise. Doesn't give a whole lot of detail, like apartment 101 leaked over, had an active water leak for the last 3 days that we weren't aware of because it's a vacant unit. We didn't realize that it was cost of, none of that. Brief yet concise details. And then the other line item that you're going to do is applicable to that line, the numerical indicator above, so contract temp. Let's just pretend that you had some temp services, and those temp services were specific for your maintenance team, right? So what I would put, temp services to supplement the maintenance team. Brief yet concise. It explains exactly why you had them out there. We don't need to know specifically why that temp service, who that temp services what we're covering for, or why, right? So, our owners and investors aren't interested in knowing that one of our properties doesn't have a maintenance team, so we've had to supplement them with temp services, okay? Or that we're working on a huge project, so we had to get 3 extra temp laborers. What they are interested in knowing is, did we have them or not? And in this particular instance, we did. All right. So again, I'm not going to necessarily do explanations for each line item, but things that in your administrative expenses, things that I would go ahead and explain were like your accounting or CPA if you were budgeted for anything. Maybe office supplies. If you're over budget there. Here we were budgeted for $260, but if you spent $400, you'll want to go ahead and explain that. Your advertising and marketing. If you were budgeted for $1,000 for your website and marketing materials, but you spent $5,000 because you ended up getting a new monument sign, that would probably be more of a capital expense. But let's pretend like it was a culmination of things. You'll want to go ahead and explain those items. Your miscellaneous administrative expenses, sure. What you don't need to do is you don't need to explain software, auto and travel, internet or cell phone charges. So you really have to, I hate to say it, it's not a pick and choose kind of thing, but you just really have to use sound judgment in things that you think your regional manager is going to want to know. Is that always the easiest? No, unfortunately it's not. But you really have to use, some good common sense in deciding what you're going to need to, bank fees are outside of your control. You can't control bank fees, right? We budgeted $200 a month for bank fees. We spent, $250 because the bank increased the fees. Do they need to know that? Probably not. Will they go ahead and reevaluate your budget next year and increase your budgeted expectations from 200 to 250? Probably. What they do want to know is if you have increased your advertising and marketing, you've increased that footprint, they want to know that. They have to know that. Why? What new things are we doing? If we were budgeted originally to go ahead and advertise an apartment guide and forrent.com, but then decided midway through the year to add on Zillow because we really thought Zillow would do well for us, well, that's obviously going to affect the bottom line. Will we take that into consideration during budget season? Absolutely, right? But, Zillow, apartment guide, forrent.com, in addition to purchasing new banners to be seen from the street, community newsletters, marketing flyers, things like that, they'll want to know that explanation. Utilities. Utilities are relatively straightforward. I've heard a couple of different reasons from regional managers why they do or don't want these areas explained. And if you're meeting budgeted expectations or you're maybe surpassing them just slightly, probably not necessary to go ahead and report that information. But let's just take an example here and say that for the month of March under sewer, you were budgeted for 1040, but there wasn't, you didn't pay anything out. That should be first and foremost an indicator to you. That should be oh shoot, I never received a bill from the city for sewer. I need to make a phone call and find out what happened with that bill. Or maybe you received that bill, but you didn't receive it until after the month that you're doing your BVR for actually closed. So, but you want to indicate that, right? So for sewer, a reasonable explanation could be received services invoice after the month being reported closed. Oops. Sorry guys, I have a couple of things going on my screen. Being reported closed. That's a reasonable explanation, and myself as a regional would probably want to see that. The other explanation is if you doubled your budget because maybe you paid January and February's water bill during the month of March because they sent you out. There was one bill, January's bill came late, but February's bill came on time. They'll want to know that explanation as well. If you're on budget, that's perfect. If you're under budget, really not necessary to put an explanation. Those are sort of the two reasons as to why I would explain anything, is if you were tremendously over budget because you double paid for 2 different months or several months at a time, or you didn't receive the invoice in time prior to the month closing. Okay, your repairs and maintenance and supplies, your outside vendors, your turnover expenses, your extraordinary expenses, both your supplies and your outside services. Again, that threshold is at $200. So if you're over budget by $200, you want to be explaining that. So for example, your carpet cleaning and floor repair vendor here, it's over budget by $377. You were only budgeted for $190, but you spent $567. tell us why and what units received what units were cleaned for carpet. Maybe you had units 3, 8, 10, 13, and 15 that all had been cleaned. It's reasonable because earlier in your explanations, you indicated that you had a higher vacancy than anticipated. So, a lot of these sections will start tying into one another. We understand if you had a higher vacancy that your turnover expenses are probably going to be over budget as well. From carpet cleaning to painting to cleaning supplies, we understand that those things are going to be over budget from time to time if you're carrying a larger vacancy than anticipated. In this section, the reason why I keep on coming back to it is because there's one additional piece of information aside from explaining your numerical line items that are over budget that you're going to need to indicate in here. And from what I understand, this particular section or this particular line item or explanation has been missing from some individuals' reports. So definitely keep this in mind. The first line item that you're going to put in here, and it doesn't have a numerical indicator, they just want to know how many units were turned in the month being reported. So in this particular example, we have 10 units being turned in the month. And then what you're going to do is you're going to come down here and you're going to start listing your line items. So, we have carpet and floor that's over budget. We have countertop repair and surface that's over $200 threshold. We have your bathtub tile repair that's over budget by $740. Your contract cleaning by $955, things like that. You're going to want to list those items in this section. Start explaining why. And a lot of the times, if you were turning 10 units that month, you're going to see the same 10 units listed here each time. What's not important? We don't need to worry about your security deposit maintenance recovery. Okay. And then scrolling down to the very bottom, you're going to want to delete these lines. Lines 8,000 through 9,000. Just get rid of them. They're not applicable. They're not very important to us. We don't really need to know. And then take a look at what your net income was. Did we make money or did we lose money? In this particular instance, we ended up losing money. Well, why? Well, this particular property is going through a full renovation. So, we probably went into multiple vacant apartment homes and did a huge building renovation that could have been applicable to the interior or exterior. And it looks like this particular one was applicable to the exterior. So maybe they had new landscaping, new fashioning, new roofing, all of that jazz. It looks like we stayed pretty low in budget for renovate and turn supplies for extraordinary expenses. Keep in mind, your extraordinary supplies and outside services, this is capital improvement. Renovations, remodels, really high-priced expenditures such as pool resurfacing, maybe putting in a business center, maybe putting in a fitness center, things like that, okay? So that gives you the general idea or the general gist of what we're looking for in the budget variance report. And so what I want to do is I want to stop talking and I want to start hearing from you guys as to what I can do to help you be a success with this report. Again, it's fine tuning. It's making sure we put in all of the good information that our regional manager and executive officers are looking for. But let's have a conversation. Let's start figuring out how we can make this report a success for you. Any questions at all?
Hey Vince, it's Jill.
Hi, Jilly Bean. Good morning.
Morning. Sorry I was late, but I'm here.
Happy Monday.
I know, right? So I have a question. I know we're supposed to pull these on the 1st, but are we able to pull them before the 1st and start working on them?
Absolutely. That's a great question. I'm glad that you asked it. This is a progressive report. So as your accounts payable is being processed throughout the month and it's being approved by your regional managers and checks are being cut, your figures here in PTD actual will change. And this is one of the reasons why I recommend that you keep up with your report on a weekly basis. You can pull this report at any point in time. Anytime you want, you can pull this report. You cannot play around with the report, meaning we would ask that you don't prepare the report prior to the first, meaning you don't try to turn it in prior to the first. The last week of the month, when you're completely locked out of accounts receivable, processing move-ins, move-outs, we genuinely want you to be pulling this report. And we want you to be looking into items like your apartment vacancy and your delinquency. We want you to be looking into your application fee incomes and administration. These areas here, you can start researching and pulling information for the last week of the month. Start taking down those notes so that on the first, all you have to do is just plug and play. You've already done the brunt, or the brunt of the work. Now it's just a matter of formatting and inserting that information. With that being said, where you're going to probably notice items missing will be under your repairs and maintenance supplies and your outside vendor information. Well, why is that information missing? Well, it's typically missing because you're processing accounts payable through the very last day of the month. And some of that information may have not been uploaded into Yardi yet because the batches are still open. Accounts payable hasn't been approved yet by your regional, and checks haven't been cut by Heidi. So these items like your outside vendor and your turnover expenses, extraordinary or capital improvement expenses may not have all of the totals listed in there quite yet. But for all of the other administration stuff, from your management fees to utilities to everything up above, typically you can research and pull that information ahead of time. Does that help you, Jill?
Yes, it does. Thank you.
You're welcome. Anybody else? Okay, you all are quiet, so I'm going to assume that we're all on the same page. Now, you guys are going to do a wonderful job with this report. We're coming down to it. I think this is the last week of the month, isn't it? I think it is. And then we're into October. And my word, can you believe it? This month is just, this year is almost done. I can't believe it. Yeah, we're in our last week. So you guys should be closed out. Your controllers should be doing month-end balancing at this time. Great question, Jessica. Jessica asked, since the report or the first ends up being on the Saturday, should we do the BVR Friday or Monday? The answer to that question is you'll pull your BVR on Monday. Janice, Stratford Plaza should have its, oh, you're welcome, Jess, should have its own budget already uploaded and ready to go. We can go ahead and talk about that a little bit more. And what I'm aiming to do is just remotely connect in to ensure that we're looking at all the same stuff. Okay. Okay. In the meantime, what I want you guys to know and understand is that we're here to help you. Again, I think I say this quite frequently, and I really do genuinely mean it. And I say it because I just want you guys to have that friendly reminder that we genuinely are here to help support you. We at the corporate office wouldn't exist if not for you guys. That's why we're here, from payroll to accounts payable to making corrections on your account ledgers to helping with training. We are here to help make you a success. So we want you to be able to reach out with any question. It doesn't matter how big or how small, if you think it's silly, it doesn't matter. The only silly question is the one not asked. So make sure that you're reaching out to myself, your regional manager, if you have any questions in regards to the budget variance report or how we can help you to be a success here. Going back to the very fundamentals of it, again, my recommendation is to pull your training guide in the example BVR, use both of those resources as you guys are gearing up to go ahead and do the BVR for the month of September. Use brief yet concise verbiage in your explanations. Pull direct lines from that example BVR. If it's in the example BVR, that's exactly how Tracy would prefer things to be worded. Make sure you're being consistent with your abbreviations. If you're abbreviating apartment as APT with a period, make sure you're doing that for all of them. Don't just do it for one. Again, it's a professional report. Check your spelling, check your grammar, check your sentence structure. Make sure that your font is the same throughout. Double check your explanations. Just really have that eye for detail. And make sure that you're just knocking this report just right out of the park. One final thing, again, this training seminar webinar will be available online through YouTube. I'm going to try to attach the slides, the training guide, and the example BVR to that video. And you should start to see some more videos here in the near future, introductions to Yardi and other things. And then just one final thing while you guys are hanging on with me. As many of you know, I have been working diligently on reformatting and standardizing our forms across the board. Our pre-qualifying paperwork has been completed. It's been verified and reviewed by the regional managers. It's been simplified. It looks amazing. It's ready to go. So what I'm going to be doing is I'm actually going to be uploading these forms to Yardi. Yardi is going to allow us to basically utilize it as an intranet. And these forms will be available to you via Yardi, but I'm also going to email them to you. We think that Yardi is going to actually be that perfect stand-in for like Dropbox or Google Docs. And what you're going to find with the next package, which is your leasing paperwork, I'm just about through with that. That's actually going to be loaded into residential correspondences. And residential correspondences is actually where you pull your demand for compliance or possession. I'm going to load that leasing paperwork into there so that it actually formats everything correctly for you. It looks good. It inserts all of the residential information accurately for you. So you'll actually be able to pull all of that leasing paperwork directly from Yardi. There's going to be a little bit of a trial and error process with this, so I may also deliver those documents to you via email just to be certain that we have a good, safe backup. But please start anticipating on receiving notifications regarding this paperwork. And this will be the paperwork that you utilize from this point forward. All other forms will have been retired and or discontinued. The exception to that is if you have one at your property that really, really works for you, I want to know. Basically what we want is if Jessica over at Park It Fits ends up going and working with Rebecca up at Golden Arms and Miners Mesa because Rebecca's going on a 2-week vacation, that we're using the same forms at all of our property, of course, with the exception of our affordable housing communities, which may have 1 or 2 extra forms thrown in there based off of the demands of their community. So I just wanted to share that little tidbit of information with you. Otherwise, thank you so much for spending some time with me. I'm going to hang out for the next 5 minutes if you have any follow-up questions. Otherwise, I wish you guys the best of luck on your Monday and good luck with your site visits with Ben and his father this week. You guys are going to do wonderful. Just kick ass. You're welcome, Barbara. Have an awesome day. Thanks, Jessica. We'll see ya.
Thanks, Ben.
Hi, you have a wonderful day, guys.
Thanks, Ben.
Bye.